This week, I made over $5,000 trading news. And no, I didn't do it by taking random trades just ahead of the news. I did it by building a clear and calculated plan using the macroeconomic picture to work out which way the markets were going to go through the CPI release. And I made this money across these 4 trades. So how exactly did I do it? And how can you start to trade news the right way? At its core, fundamental analysis has 3 major factors that we need to be aware of: inflation, unemployment, and interest rates. These 3 things go hand in hand, and they have a relationship that is quite easy to gauge when you get to know it. Interest rates are used by central banks to speed up or cool off an economy. If unemployment is high and inflation is too low, that indicates no economic growth. So central banks will lower their interest rates to make it cheaper to borrow money so that businesses can take more risks, people will go out and get that mortgage or buy that car, and it will stimulate the economy to grow. On the other end of the spectrum, if inflation is really high and the labor market is very, very strong, the central bank may increase interest rates to try and lower the amount of people in work, stop people from spending money by raising the amount of interest that people have to make on purchases, and also by encouraging spending by making it more valuable to actually hold your money in a bank. Now, these interest rates are swayed by unemployment and inflation, as I just mentioned to you. Wait a minute, before we continue the video, I wanted to let you know I have a free 70-minute training which is going to show you why you're not winning and how you can turn your results around. Within that hour-long training, I'm going to show you 10 different topics which are holding you back from your success, and hopefully help to break those shackles that are holding you back from becoming a winning trader. So make sure you check that out, the link's in the description. Now let's jump back into the video. So if we're focusing on the US dollar, which is the major currency, there are 3 key data points you need to focus on for simple fundamental analysis. Those are going to be the federal funds rate, the unemployment rate, and also CPI. The federal funds rate is the interest rate of the Federal Reserve, the unemployment rate is quite self-explanatory, and the CPI is the consumer price index. And what this does is show us the cost of a basket of goods overall. So this is basically our inflation rate. So now I'll show you how I broke down the picture leading up to these trades that I took today. So last month, in the start of February, the unemployment rate decreased just after the Federal Reserve put their interest rates up by 0.25%. So they raised interest rates, and even still, unemployment continued to decline. This is bad for the Fed's overall plan of raising interest rates to tackle inflation, because if unemployment is still declining, it means their plan of lowering employment to battle inflation is not yet working, which may mean that they have to increase rates in the future. That is going to be bullish for the US dollar. We then focus on the CPI. And when we look at the CPI, we actually saw that inflation year over year increased. Now, while it is down from last year, it's only down by 0.1%, and it was expected to be down by 0.3%. This very small decrease indicates that inflation is being stubborn and is difficult to get rid of. What does this mean? Well, this means that the Federal Reserve, the central bank, is going to have to continue pushing interest rates up if they want to bring inflation down. Interest rates going up is bullish for a currency because it makes the currency more attractive to save money in. So foreign investment will flow out of different assets and into the US dollar to benefit from that high interest rate. We also saw that the month-over-month CPI dramatically increased, showing that very recently inflation has spiked up once again, further leading to the point that inflation is not under control and the Federal Reserve is going to have to continue increasing interest rates, attracting more foreign investment, and making for a more bullish dollar. So then crossing that over into this month, we saw a testimony from the chairman of the Federal Reserve, Jerome Powell. He basically runs the show, and in his testimony, he said that the Federal Reserve were going to have to continue to increase interest rates. Once again, a bullish sign for the US dollar. And then this week, we did see a very small increase in the unemployment rate, showing that maybe the plans are working a little bit better. But the overall picture suggests that they are going to have to continue increasing interest rates if they want to beat inflation once and for all. Remember, inflation right now is at over 6%, and the Fed's target is 2%, as is the target for most central banks. So they have a long way to go if they want to get the currency back on track. So how did I use this to my advantage? Well, ahead of the CPI, I thought back to the previous inflation figures, and I realized that things were very stagnant. And this very small 0.2% increase in the unemployment rate was very unlikely to have actually decreased inflation by any meaningful amount. So from everything I've told you so far, I expected the Federal Reserve will continue to increase interest rates going into the week ahead. The speculation and the run-up to this, caused by the flat, stagnant CPI data that we got in March, suggests that the dollar can continue moving bullish. Therefore, we can look to sell other safe assets against the US dollar. So I want to show you the charts now, because it's interesting how the technicals and fundamentals align quite nicely to give you high confidence trades with clear entry points. First of all, we're looking at gold, and this position I entered from this green area here. So this is where I began to scale in ahead of the CPI news, and then I got out during this push down. Now there has been a big spike coming up from this, but that is for a future video. I will explain why that happened. The next trade I took was Euro USD, and this one once again came from a 4-hour supply zone. Well, this is a more refined supply zone sitting within the 4-hour price action, but it's a nice supply that lines up nicely on the 1.07500 key level, which is a major psychological level. So I entered just ahead of the CPI with my fundamental backing, and throughout the night and throughout today, we've had a big sell-off. Once again, this sell-off was accelerated by extra fundamentals, and I will break this trade down in depth in a future video. But regardless of the acceleration, we positioned ourselves nicely following the fundamental flow, and that is what led us into these winning positions. And GBP USD as well, this green box marks the entry zone, and once again we came from a clear 4-hour supply, which pairs up nicely with the 1.22 and 1.21750 key psychological levels. So we positioned in here, we benefited from this sell-off, and then that extra news came out today which accelerated the sell-off even faster. And the last trade was on USD JPY, and that was just a small push from here to here, which did around 50 pips. Now fortunately, I did manage to get out ahead of the headline news that no one was expecting, which is what has caused this big downturn. Now this is definitely topic for a future video, and I will probably cover it in my next market breakdown. So if you want to understand why these big moves happened, I'll be covering that in the analysis video. But those are the trades that I took, and that is how I got into them. I followed the overall fundamental flow to execute simple, low-risk positions following the directions of the overall fundamentals. It worked out very nicely for me, but one thing you do need to be aware of when trading through news events as a catalyst for your trades is that they can be high risk. So you need to make sure you're trading less risk per trade than you usually would in a standard technical setting. And you also need to be trading with wide stops, because if you've got a 5, 10, or even 20 pip stop loss on these positions, a lot of the times you will be wiped out by spikes before you actually manage to profit from your overall analysis. But that is how I made over $5,000 this week using these 4 trades. I hope you've enjoyed it. Thank you for watching, and I'll see you in the next video.